Welcome back, and joining us is a very special guest now. Vandita Pant is Chief Commercial Officer at BHP Group, and she joins us exclusive on CNBC-TV18. Vandita, hi. I want to start with the commodity markets and the way they have been reacting for last some few months now. Would you say it is all about macro? Is it about the way the US dollar is behaving? Is it about the individual fundamentals that you see impacting the prices?
Yeah, very glad to be here with you, Manisha. The macro has a lot going on, as you said. There is, of course, the interest rate in the US and whether the balancing of inflation pulls and pushes land softly is one issue, but equally the issues around volatility, geopolitics, etc., all coming into making it quite a volatile macroeconomic background. And I think of it in a particular way, which is, are we getting into slower growth for rest of world? And I'll explain rest of world going forward a little bit than what we thought was the case earlier in the year. Absolutely. However, I do think that over a period of time, over 12 to 18 months, China, interestingly, can be a source of stability from the world growth perspective, because that's one country where the inflationary pressures are not there, is a very important one for commodities, of course, and has all the levers, fiscal and monetary, to start to stimulate the economy, which, of course, is a very big end use. So I would say volatile background, macro, globally, absolutely. We don't think it is at a cliff, though, and US can really escape the fate from a recession perspective. But in China, in 2 quarters or so, can start to become a source of stability for the world.
Fair point. I also want your view on the energy space, Vandita, because that is really buzzing, and this is going to be a second straight week of decline here. But whether it's about crude oil prices, which is volatile, natural gas, which is very, very volatile, would you look at the Russia-Ukraine conflict or the Europe energy crisis and the way we are looking at various statements now coming in from Europe leaders?
Yeah, indeed. I think energy cost and the mix of energy under use is really a concern, absolutely. If you see the inflation part, energy and food inflation are 2 of the biggest drivers, and they will linger for a bit. I think it's also fair to say that some part of the inflation in the world, which was coming because of port congestion, manufacturing base, supply chain issues and constraints, we see that already coming down. So one part of inflation driver, which related to really supply chain congestions, coming down. However, structural bits and in energy inflation will tend to be here for a while. And what that means is, even in our own operations, we have seen that come through, be it diesel pricing or electricity pricing as input cost to us has seen a real increase. Having said that, as you know, we have done very well on cost discipline compared to everyone else in the industry, and hence we are the lowest cost producer of iron ore in the world for 3rd year in the running, and similarly our cost control on unit cost.
Fair point. Since you talked about the caustic part of it, what's your sense on the prices then? Because we've seen commodity prices come sharply off from the kind of highs that we've done in this year, off from the lows as well. We're somewhere trading on the lower side of the band, though.
Yeah, I would refrain from directly making a reference to prices, Manisha, if I may. But what I can say is, from a demand perspective, India, for taking steel into account, for example, as I said, we are forecasting around 8.5% growth in steel production this year for India versus last year. We do think that 300 million tons of India's ambition for the end of the decade sounds very ambitious, but even if you were to haircut it by 10% or 20%, we are still into 250 million tons, which is a massive increase of growth. And by 2050, India could very easily be at a stage of 400 to 450 million tons of production of steel. That, in a market which currently is 1.8 billion tons in the world, makes India one of the absolute leaders in steel production.
That's about steel, and you've spoken about various commodities here, Vandita. But going forward, what are the things that you would want to watch out for? Because we still are in a very uncertain scenario in the global markets. So what are the concerns? What are the fundamentals that you are keeping an eye on?
So I would say Europe continues to be a concerning region. Of course, given the Northern Hemisphere winter coming in, energy challenge will be more acute. And that does mean that it already flows into the industrial activity in that region. So that region is one of the weak spots, if I can put it that way, overall. Overall, we would think world growth at 3.25 next year is very much doable. US slower growth, absolutely, but we can also see that a peaking of inflation happening in 2 quarters' time in the US. What that does mean is there will be structural inflation which continues for this decade, because it's obviously a fact that this decade is going to be higher inflation than the previous decade view. Of course, at a one level, I would say recession talk, especially in the US, is a bit of a moot point, where economy is almost at full employment. And as you know, growth for growth's sake is not really the point. The issue being, if there is full employment and the demand dynamics continue, we wouldn't call it a recession economy at all.
Okay, Vandana as well as Manisha, thanks very much for taking us through that conversation. We need to take a short break. On that note, with the news that we have the Bank Nifty, which is off the day's high, but still holding up with a gain of around 0.6%, and the Nifty too, currently at around 17,848. We'll take a short break, get you more on the other side. Stay tuned.